NBC Markets Morning Call, 1st of October 2025. I'm Mike Gardner. General advice warning. This doesn't, obviously, any opinions expressed in this are my opinions only. And make sure you get advice before you action any investments. Overnight, look, I mean, stocks just essentially shrugged off absolutely everything. So, we got an almost certain government shutdown, valuations at record highs, overly ambitious rate cut expectations due to hawkish Fed, as reflected in the RBA's statements yesterday. Central banks are still not very happy with inflation, and nor should they be. And we really haven't seen these. We still keep getting these numbers that are showing sort of resilience in certain parts of the economy. There's more tariffs coming on the 14th. I think around kitchen fittings, lumber, furniture, and vanities, unupholstered wooden products, essentially this market is just seemingly bulletproof at the minute. So best thing to do in these scenarios is just not try and make sense of it. Because sometimes the market doesn't make sense. And I have clients who look at me very odd sometimes, and with a confused look, and but there are periods in history, and they're not particularly rare, to be honest, where sentiment just overrides any sort of rationale. And when you've got these huge market caps and the highest concentration in history for basically about 6 or 7 or maybe anywhere up to 10 stocks, which is now I believe 75 or 78% of the NASDAQ and a good over half of the S&P. All you need is Nvidia to be up 2%, and that's the same as the entire banking sector almost being up 2%. So, that's where the gravity of this concentration. I mean, obviously it works in reverse as well. But yeah, at the moment, there's no catalyst there as it stands for Nvidia, which is a bit of dip buying, apparently, which is code for, that's when financial markets journalists don't know what's going on. They just call it dip buying. It traded a 52-week high last night. The sector was broadly positive. I mean, Intel's been on a heater, most dysfunctional company that they're just trying to salvage something out of there at the moment. And, as I mentioned yesterday, healthcare looking very cheap. We bought IXJ yesterday on the ASX, which is the healthcare ETF, just on the back of its very good defensive exposure at the moment. The IXJ, which is a global ETF for healthcare, large healthcare names, is trading around about a forward PE of 18.5, 19, which is basically the low of the last decade. Normally it trades within a range of about 18 to about 30 and has spent most of its time around the 30 mark. Really good value there in that healthcare sector at the moment because Democrats and Republicans are going head to head over healthcare. They're fighting a losing battle, and the fact that they've actually picked a fight on healthcare means that there's probably a little bit of a line in the sand in some way, shape or form. So you would expect, I mean, Pfizer did agree to announce lower Medicaid drug prices in exchange from a 3-year reprieve from tariffs. That's just Trump's bread and butter. He's essentially, he doesn't want to do the tariff, but that's exactly what he wants, is companies like Pfizer to come to the table and have a little bit of give and take. This as jolting as Trump's tactics are, I've got to say, as a markets guy and someone who's very very practical, just at least stuff's coming to a head in fairly quick, smart fashion. Whether you're left or right, the bottom line is the Republicans and Democrats, and the politicians that are in there at the moment, every single year make a new record for the least amount of bills passed, and they spend more time bickering with each other than running the country. So, you may not like Trump, but at least something's actually getting done. Same here in Australia. Both parties, since probably the late 2000s, it's a race to the bottom. It's you've got to be the least worst party, and it's I don't want to get too political, but that's you'd rather people just run the country and get things done, particularly when you're paying for them. So we are headed for a government shutdown. I mean, it's not 100% confirmed, but no sides budging. So we will have some layoffs. Apparently, there was 100,000 employees that were going to hand in their resignation, government employees that were going to hand in their resignation overnight. Whether they did that or not entirely sure. So look, let's have a look here. So these are the 20 odd government shutdowns in history. Most of them, it's happened under Democrats early, and then fairly split, and then mostly Republican. In recent times, the Democrats don't have a lot of control. So, as I say, digging their heels in and putting a line in the sand, I think is probably going to be pretty positive for healthcare overall. But as you can see, during the period of the shutdown, the last one was 34 days, and you've sort of got 700,000 people who aren't going to get paid, which is just, I think, is disgraceful. It's particularly from a government, and particularly when it's more often than not, it's just about political posturing. But in that period, 2018-19, it rallied. And as you can see here, generally 54.5% of the time will be higher. And on a 12-month basis, nearly 86%, 86.5% of the time, it's higher. So it does. I think the last shutdown cost the American economy about 11 billion. We've already got weakening jobs numbers, and look, but as you can see here, much more sort of bullish. These markets here, much more bullish sort of markets. Really, like back in the 90s, late 80s, 90s, we had interest rates come down from 15 to 3%. So, that is probably just more the free flowing effect of money. Whereas back in these days, you would certainly see, money was hard to come by. Economies didn't grow at hyper pace. It's very different world. But I would say that is, they're not good signs here. The 12 months, 12-month returns there. 2018-19, I think they were getting rate cuts as well. So on average, lasts about 8 days. Median's 4. And we're probably likely to go sideways, possibly down, but we're not going to get payrolls numbers either. So that is going to push back that, what I believe is probably the only potential catalyst for the market to fall here at the moment, because everything else has been, I've not seen an equity market in 30 years of being in markets that is just this insanely bulletproof at record valuations to boot. So and this is an industrial revolution style event with AI, and we've got I think those top 10 odd companies or 20 odd companies, something like 20% of the world's money supply and market cap now as well. So it's just frightening. So there is genuinely only so much money in the world, about 140 trillion supposedly, although 141 now. The US printed money last month, which, look, that's going to be positive for equities. The stock prices will be higher. They won't be worth more, but they'll be higher because your money's just been devalued yet again by the US buying back bonds and effectively doing QE. So manufacturing PMI tonight. We did have RBA yesterday. They were quite hawkish. They've really got to stop letting these idiotic journalists into, and maybe put some economists in there, or maybe vet the people. I think they were saying it was brutal betrayals and all this crap. Essentially, the RBA is doing its job, and it doesn't. And the whole point of it being independent is it doesn't respond to populist policy. So I do believe it was the Sun Herald journalist that said that. That journalist should be taken off. Go back and write stories about cats playing piano or dogs riding surfboards or something. I mean, just don't turn up to an RBA press conference. It's absolutely ridiculous. and just, maybe stick with, some more reputable people being let into that press conference. I think is about the only thing I would say, because the RBA's got to do its job. They're not there to, they're not there to give you a headline. But, that rant over. Apologies for that. So employment numbers, if we do get this shutdown, which we'll know in the next few hours, won't be coming out. If we do, and look, I would say even to the point where they're in doubt, because we're going down to the 11th hour here now. Just been watching Bloomberg, and every politician that's come on and said we're definitely getting one. So don't know when those employment numbers will be released. We'll just have to keep an eye on things overall. Yeah, look, gold, silver. I mean, gold did recover a little bit, but probably the first negative European session we've seen in a very long time. When I say very long time, 2 or 3 weeks. So, silver, copper, platinum, and gold initially. Look, I think I think that when we get this thing sorted in, these government shutdowns, as you just saw in those stats, tend to get sorted out pretty quickly. 4 to 8 days will be the likely result of it. You'll start to see gold pull back as well. So that's where we did a switch yesterday for NMPC. We've had silver for 18 months. We've had gold for 18 months and gold miners. We've had platinum for 5 months. We've had copper for 12 months. So we're fairly deep in the money now in Wire ETF, silver ETF. We've got structured investment plays leveraged in all of them as well. So we took some off the table yesterday and trimmed from what I described as, we weren't just overweight, we were morbidly obese in allocation to those. So we took it back to an overweight allocation yesterday and flicked into healthcare. Getting high quality defensive stocks at cheap valuations is a great play in the long term. You just got to filter out the noise a little bit and see the forest for the trees. The likes of CSL, Telix, I think Clinuvel looks pretty good as well. Neuron Pharmaceuticals, but all those pharma companies have just been hammered, and they've been hammered through a little bit too much overall. I mean, it's not a consumer discretionary sort of product when you're talking pharmaceuticals and healthcare. It's a need. And people tend to find the money, so they have good margins. So I would expect that precious metals to cool a little bit, and I think it'll be healthy for the long-term rally. I think Trump as well announced like he was going to get peace in Gaza or something as well, something ridiculous like that. I think that that was part of the initial move in gold yesterday. I would probably likely see, I would think that will start to peter off a little bit. Uranium as well, just drifting. So overall, I think some of those really hot thematics just might start to find a little bit of profit taking. We haven't. We took a third to a quarter off. We're not talking. We're still very confident in the thematics, but when you get the second best run in gold in history and one of the best runs in silver and platinum in a 4-month period in history, you got to know when to hold them, know when to fold them, know when to walk away, and know when to trim some profits. So yeah, we're so as well, free webinar series. Just a reminder again. So there is another one on the schedule now, just due to the popularity of these things. We do have limited capacity in terms of we probably should be looking at buying shares in these webinar companies, because it's extraordinary how expensive it is. But to get mass numbers, so there is limited spots. We're only a little shop. So Security Super Cycle on defense stocks, October the 7th. We do go to daylight savings this weekend, so just be wary of that. It'll be 12 p.m. Sydney time on Tuesday, or next Tuesday. And AI and automation and robotics is another one as well. So hyperscaling AI picks from the last webinar, smashing the S&P in 4 weeks. So yeah, Google and Oracle like up 20. Oklo was up 100 at one stage. It's pulled back a little bit. Vertiv's up 20. The copper miners are up nearly 30%. in just 4 or 5 weeks. So with the S&P only up 3, so there are some good picks in there, and there will be some ASX specific picks as well, and some global stuff. So make sure you're registered there. Just go to our socials. And you can, and there'll be a link there somewhere to register. I will put it up in the comments as well. But yeah, BHP as well got banned from exporting iron ore to China. There has been boycotts in the past. It was down 5% in the London session. I think it only ended up down about 1% in the New York session overall. It seems to be a negotiating tactic, but it's the first time it's ever happened that they've just specifically targeted one company. So probably expect a little bit of panic and a little bit of re-rating there, but it's a negotiating tactic basically. So if they want to pay the extra to ship their iron ore from Brazil, go for your life. I can't see Rio and Fortescue, going on strike with them, but who knows? Maybe they'll get together. So probably just a fairly negative day today. Australian market just does not have the ability to climb the water worry like the US investors do. So I'd probably expect this to open lower and head lower over the course of the day. Have a great day, everyone, and we'll speak.